Hello, it's a very lovely good evening from here in Delhi, and hope that each one of you, as always, are absolutely fine. And we always pray to the Almighty to keep you absolutely in fine shape and, of course, in very sound health. So, on such note, and this is the note generally I use always. So, anyway, now we come straightway to the point. Actually, as by now you must have realized that what exactly is the standard which we are going to pick up today. Ind AS 19, this is on the cards definitely and surely, and each one of you are quite well aware of this particular fact that this particular standard in fact deals with employees' benefit. Similar to this particular standard, you already actually studied AS 15 if you remember actually. And to be very honest with you, most of the conceptuality shall remain same. But in spite of that, we are going to dig very deep in this particular standard because through my experience, I have seen actually that in some areas, if not in complete all the areas, in some of the areas, the student fraternity find themselves actually at a little bit of trouble. So we on our part, as usual, shall do every effort to see to it that things are made what we call absolutely clear. So India is 90 employee benefits. You know the meaning of employee benefits very well. Employee benefits simply means any sort of compensation which an entity actually gives to the what we call uh, an entity gives to its employees. It could be either in what we call monetary terms or in non-monetary terms, correct, in cash terms or non-cash terms. It and as we also are aware of this particular fact that various what we call benefits which we give actually are categorized into some broad categories, short-term benefits, long-term benefits, termination benefits, retirement benefits, etc. So regarding all these what we call issues, of course, the standard something has to say, and we need to know that. So here we go and start this particular standard as usual. So hope that each one of you are absolutely ready with your notepads and pen, pencil, etc., whatever it is. So let's begin the session. First of all, since we are what we call studying employee benefits, let us actually get acquainted first of all with this particular term employee benefits. Employee benefits. Employee. Now, so often during the course of discussion of this particular standard, I will have to use the word employee. I will simply use the short form double E. Correct? Employee benefits. Employee benefits simply means simply means or simply refers to all forms of all forms of compensation, all forms of compensation, all forms of compensation, all forms of compensation, as I told you, whether cash or non-cash, cash, non-cash, paid by employer, paid by employer. Now, again, during the course of discussion of this particular standard, we shall come across this term employer. So, for employer, henceforth, I will use the abbreviated form ER, correct? For employee, double E, and ER for employer. Paid by employer to employee, to employee, apart from, apart from salary and wages, apart from salary and wages. So all benefits, all type of benefits, it will include salary, wages. Besides that, it will also include any sort of compensation, cash or non-cash one, paid by employer apart from salary and wages, salary and wages. Why we will pay to the employee? Because he will render some services to us. Wages for the service, for the service for the service provided, for the service provided to the employer, to the employer, ER I am writing, to the employer. So that is exactly employee benefits. So after having acquainted ourselves with employer, with what we call employee benefits, now let us have a look actually how employee benefits are treated. Employee benefits, employee benefits, employee benefits provided, employee benefits provided by the employer, by the employer, ER, during during an accounting period, during and during an accounting period, during an accounting period are recognized, are recognized. So whatever employee benefits an entity pays to the employee, so these benefits are recognized as A. Either we are going to recognize it as a liability, correct? Or we are going to recognize it as an expense, as an expense, correct? Actually, we recognize it as a liability when what we call these benefits are to be paid in future, and we recognize it as an expense when the employer consumes the benefit, correct? When the employer consumes the benefits, correct? Which arises from what we call employee service. Then third point is to make you understand what exactly I have written so far, correct? So for that, I will pick up a case study as usual. So this is the case study. Just to tell you the point which I just wrote earlier. Case study one, of course, this is. In this case study, I write, let us say there is an employee by the name of Mr. F. Mr. F. Mr. F has rendered, Mr. F has rendered services for 12 months. Services for 12 months in the current accounting period, in the current accounting period, that is 2020 and 21, correct? So in the current accounting period he has rendered the services for entire 12 months. However, however entity has paid, entity has paid only rupees 1 lakh. So entity has paid only 1 lakh out of total accrued salary, total accrued salary of rupees 1 lakh 20,000, of rupees 1 lakh 20,000 at the rate of, let us say, rupees 10,000 per month. because he has served the organization for the entire 12 months at the rate of 10,000 entities is supposed to pay him 1 lakh 20 during the current year. But as I have written that he has been paid only 1 lakh. So what will be my entry? In fact, it is general entry which we are going to write. We will write the entry. The entity will pass the following entry because everything we are going to do from the perspective of the what we call entity. Correct? Remember one thing. So salary is account debit. Salaries, and you can simply write in bracket employee benefit expenses. Salary account debit 1 lakh 20,000 because this is the expenditure of the current year, so we will have to book this expenditure. Correct? 2. Bank account. We have paid how much? We have paid 1 lakh. And how much is still we have to pay? This will be paid in future, of course. So salary, we haven't paid it today, but we will have to pay it later on. So salary outstanding, we call it. So as you know, I have written over here, employee benefits are reflected either as an expense or liability. So that portion which you are supposed to pay still will be reflected as a liability. But the entire expenses of the related period will be reflected in P&L. However, in rarest of rare cases, these expenses may be debited because salary ultimately will be debited to P&L. These expenses, instead of being debited to P&L, may be, in rarest of rare circumstances, be capitalized. For example, if the salary has been paid in connection with, let us say, development of an intangible asset, so in that case, whatever salary we are paying, it will not be debited to what we call P&L. In that case, it will be debited to that particular asset. Correct? But that is rarest case. Correct? So, of course, your next entry will be statement of P&L account debit to salary account. Statement of P&L account debit to salary account. To salary account. So this is how the entries shall be booked in the books of the entity. Correct? Case study 2. Case study 2. Very slowly and steadily we have to move because it's a formidable standard. It's not an easy one. Remember one thing. Correct? Don't take it lightly. Many students commit this folly and ultimately they repent. So we should not be part of that particular group. Correct? Case study 2. Let us say, in case, in case an enterprise, in case an enterprise allows unutilized benefits, example, benefits like medical care, medical care, leave travel, etc., to be carried forward, to be carried forward, to be carried forward. Then should such benefits, then should entity recognize a provision in respect of in respect of in respect of such carry forwards carry forward benefits. What does it mean? Often entity actually gives benefits such as medical care, leave facility, and what we call travel. That means you can what we call travel two times, let us say annually. Generally, such facility is given to what we call government employees. We call it LTA, etc. Anyway, now the point is, suppose an employee has been given a facility of 10 days of leave, correct? He has been given a facility of, let us say, 10 days of leave. But out of that facility, he has utilized only what we call 8 days of. An entity has given him a further what we call a facility that in case if out of total 10 days of leave which you are entitled to, if you cannot utilize those leaves in the current year, you can carry it forward to the next year. That means he can take these leaves which he did not utilize in the current year. He is allowed 10 days of leave. He utilized 8 leaves and 2 leaves are still unutilized. So he can carry over these benefits to the next year. Correct? Now the point is that question is, should entity recognize a provision for such carry forward of benefits? Yes, entity should recognize a provision, and how the provision will be recognized, that we will come discuss later on. Correct? So at this moment, I will write the answer. A provision, a provision, a provision should be, a provision should be recognized, a provision should be recognized, a provision should be recognized for all benefits, for all benefits which an employee is entitled to, is entitled to, entitled to, and also, and also provision should be recognized, provision should be recognized, provision should be recognized, provision should be recognized for unutilized benefits which may be carried forward, which may be carried forward, which may be carried forward. Correct? So we will see in fact how the provision is created, but the point is that entity will have to recognize a provision because ultimately entity will have to incur some cost even for those benefits. Correct? So after what we call having a look over what exactly the employee benefits are, and how these are treated. Now, the next point to discuss is, in fact, this is our third point to discuss. What are different types of what we call employee benefits? Types of employee benefits. Types of employee benefits, correct? Now we will have a look over this. Different types of employee benefits are categorized into, we will see, one is short-term benefits. Short-term employee benefits, we call it short-term employee benefits, correct? STEB. Now, these are the benefits, as the name itself is suggesting, correct? These benefits are payable to the employee, correct? Within 12 months from the end of the reporting date and from the end of that accounting period in which he has rendered the services. It is important to know, correct? Such benefits, such benefits, such benefits, correct? Actually, little, I think I haven't been able to adjust the sheets today quite properly. You must have noticed in between, I'm stopping myself. This is the point actually which gives us a little bit of problem, correct? Because we are not having the professional facilities nowadays. Okay, such benefits. Such benefits, what I was writing, short-term employee benefits. So such benefits are are paid before 12 months, before 12 months, before 12 months after the end of, after the end of the accounting period, after the end of the accounting period, after the end of the accounting period in which the employee, in which the employee has rendered the service, has rendered the service, correct? Suppose this is the accounting period. This is the current accounting period, correct? Let us say starting on 1 4 20th 21, ending on 31st of 3 22. Now services are rendered in this accounting period. Services rendered in this accounting period, services have been rendered. Now if these payments, these are the payments, correct, after the end of the reporting period, if these payments are payable within next 12 months, payable within next 12 months, payable within next 12 months, correct, from the end of the reporting date. It is important to understand, correct? 12 months period should start from the end of the reporting date. then these benefits will be categorized as short-term benefits. Is it clear to you? Then after having a look over short-term benefits, second type of benefits is other long-term benefits. Second, other long-term benefits. As far as other long-term benefits are concerned, name itself is suggesting, correct? Which are expected to be paid, or what we call, after a period of 12 months, correct? It is just opposite of this one. So other long-term benefits are those which are see here I'm using the word not, which are not expected to be paid, correct? Which are not expected to be paid fully within 12 months, within 12 months after the end of accounting period. After the end of accounting period or reporting period, whatever it is. So it is just opposite of short-term benefits, correct? Then we will talk about termination benefits. Termination benefits. Name again is suggesting. These are the benefits which are paid to an employee when, of course, his services are terminated, correct, due to employer's decision. Uh, Termination benefits are those which are paid, which are paid to an employee, which are paid to an employee, which are paid to an employee, correct, on account of, on account of termination of his services, termination of his services. Then we will talk about post-employment benefits. All these will be discussed later on. Post-employment benefits. Post-employment benefits. Post-employment benefits are those which are paid which are paid which are paid after the completion of the employment. After the completion of the employment. So various type of benefits are categorized into short-term benefits, long-term benefits, termination benefit, post-employment benefits. I've already told you we will talk about all these one by one later on, correct? Then we move over to the next part. The next part, of course, is I'm writing the sheet number, correct? Now we will analyze, of course, short-term employee benefits. Short-term employee benefits. So short-term employee benefits, you are now aware of the fact that these are the benefits which are expected to be paid within 12 months after the end of the accounting period, correct? Short-term employee benefits. Short-term employee benefits include one, regular period, regular period benefits, regular period benefits such as wages, salaries. These are common short-term benefits. Besides, short-term benefits will include short-term short-term compensated absences. Short-term compensated absences. Example, paid annual leaves. It is also a benefit that you are taking a leave, but still you are being paid. Maternity leave, sick leave, etc. So it is another sort of benefits, correct, to the employee. Then we will talk about profit sharing bonuses, profit sharing, profit sharing bonuses, of course, payable within 12 months, within 12 months after the end of, after the end of reporting period or accounting period, correct? Besides, short-term benefits also includes non-monetary benefits, non-monetary benefits like medical care, housing, car facility, etc. But important thing is that these benefits are meant, correct, for a short period. That means after the end of the reporting period, within next 12 months, we should actually pay it off. Now, as far as recognition is concerned, recognition of short-term benefits, recognition and measurement of short-term benefits. Recognition and measurement. Recognition and measurement. So, how these benefits are going to be recognized, correct? So, once the employee actually renders the service to an employer, of course, then he is expected some amount of money. So, how to recognize that? Sorry. once, once the employee, once the employee renders service to an employer, the expected amount, the expected amount of short-term employee benefit, the expected amount of short-term employee benefits to be paid for such service has to be recognized, has to be recognized. And I have already told you it will be recognized as liability or as an expense. Generally, generally, short-term employee benefits are treated as revenue expenditures these are generally treated as revenue expenditures. Correct? Just wait. Let me settle a wee bit. I think the problem I'm facing constantly, I'm on the slower side today. So generally, short-term employee benefits are revenue expenditures, and however, as I told earlier, however, maybe capitalized, may be capitalized if other standard requires so. Correct? So these expenditure can be capitalized. Important point is this. So after having till up to this particular point, correct, we move over to a very significant part, correct? And that part is related with what we call short-term absences. Now, so many times I've seen questions have been asked from this particular topic, which I'm going to just take now. But the point here is that I have also seen many students simply what we call shiver whenever what we call this topic comes. So I will explain this particular point without any iota of doubt, but that I will take up in the next session, correct?